Hey traders, welcome to Charts and Coffee. Happy CPI Thursday morning. That was a big number we had in terms of let's take a look at what CPI did this morning in terms of the move. And we'll start off at really the main place that we're going to measure CPI. Is it the equity markets? No. The main place that we're going to measure CPI is what does the messaging from here on forward start to sound like as we have cooler inflation numbers. It's been a while since we've seen inflation numbers that are this much lower than what was expected. Cooler CPI numbers mean the Federal Reserve doesn't have to be as hawkish, right? Period. I mean, that's it. How do we measure that? Well, there's three places we can measure that. On the charts, we can start off with the long bond and with notes. When bonds, ZB and TLT move higher, that is yields dropping. When ZN is moving higher, by the way, the ZN ETF is known as the IEF. It can be a little illiquid in terms of the option chain, but there is an ETF alternative to the 10-year. And again, when that's moving higher, that means yields are dropping. You could see this in the TNX as well. All right, but this is where the biggest impact. Wow, and it's continuing to evolve here. 80% probability at this point, gang, that the December target rate probability is going to take us to 4.25 to 4.5%. This is a dramatically different look than what we saw pre-CPI. We continue to see less hawkishness being reflected in the Fed Fund futures. It's the Fed Fund futures contract that then turns into the target rate probability graph that we're seeing here. This is from the CME. Let's go out to May. And this continues to get very interesting. This is how we measure this. This column was the tallest before CPI came out. It's shrinking. This column is just about disappeared. This column is far shorter. 4.75 to 5%. Gang, it's really important we hang on to 5%. Why is that? Because the Federal Reserve really doesn't like seeing, and we can tell by the way that their tone shifts when we start, heading towards this target rate probability. Watch how quickly the Fed members and Powell start to sound more hawkish when Fed Fund futures start reflecting a target rate probability below 5%. So if we stay here, they should stay really stable on their messaging. If that 4.5 to 4.75 column starts increasing, watch how quickly they walk us back to 5. They're okay. I say they, as in the Federal Reserve seems to be okay with our collectively expecting rates to be in this area. All right. One thing that we've talked a lot about too is as long as M2 money supply, the printing press not going brr, right? As long as that continues to drop, CPI will lag that, but it will also drop. It's not the interest rates really alone, or arguably some people will say at all. That's why the inflation will drop. It's because of the M2 dropping. And you can measure that as well, right? That's another macro you can measure. This is where we are. This is bullish for equities. We're seeing the confirmation in the ZB, the ZN. We're seeing the ES and NQ move higher. That is what we have so far this morning. So, as always, gang, let's go ahead and jump into the questions that you all have. All right. And let's make sure we take a look at the trading view charts a little bit as well throughout this morning's session. All right, let's get to it. First up is, hey there, group. ZC corn is in an oversold buy zone. Yeah, we've had our eye on corn for a bit. That's been my preference for grains. If we're going to get into the commodities conversation, that's been my grains preference. And here's the daily chart of the grains. We've been looking at that oversold level. I haven't recently dove into it other than when we sent out the alert. Yeah, so let me show you here what I'm looking at. Because for some of you, this is a fairly old alert. For some of you, this is the first time you're thinking about this. Take a look at the neutral market trend, oversold stochastic, right? I don't need this here. Bear with me here. Let's get rid of that. V-score is pretty neutral. So V-score is really not a part of the setup, by the way. Not really. Not in any significant way. It's certainly not indicating a short, just not really indicating much, which is fine. I don't mind if the V-score doesn't have an opinion. Slow stochastic does. And we have, look at these gorgeous Darvis levels and a signal. I would love, so for follow through here, we would love to see with today's candle, and inside day is fine, but follow through is going to ideally be as we trade up through 672, right? So some of you probably have the ZC calls. CORN is fine, as is the ZC futures. So that is what we have on corn. All right. And check the alerts. I can't remember when we even sent that alert out. But this is why I park conditional orders. I'll have to check on that. I don't remember the date, but you can look in the alert section of the rooms. All right. Next up, can we take a look at Amazon? All right. Amazon's an interesting one because XLY continues to move lower. Tesla continues to move lower. Overall, these are both downtrends. And while we're going to see sort of a high tide effect, anything that's related to S&P, NASDAQ, Dow, consumer discretionary, communications, financials, healthcare, tech, they're going to benefit from this overall high tide. I don't think this is in any way a game changer for Amazon, because we're still in a downtrend. We're still in a downtrend. And if we get enough of a rally, I just want to short it at some point when we get higher and higher towards resistance. So as far as a longer term trade, daily time frame is one way to look at a long-term trade, and a daily time frame would be, days to weeks. What about weeks to months, or maybe months to years? That would be the weekly chart of Amazon, and even that's in a downtrend. So I am not ready to engage Amazon either on the daily or the weekly yet. Editor, no, not yet. Not yet. Okay. Gary B asks, say again, Gary, what do red propulsion dots above the candle mean? It's not a sell indicator, Gary, necessarily, but it tells us that the 8 exponential moving average has been crossed by the 3 exponential moving average, and that dot indicates the cross. And it tells us that the 8 EMA could be a level to consider for a short if the structure is telling us that we can short. All right. All right. Next up. And if you have the symbol that you're looking at, Gary, I'm happy to bring it up. Just let me know. COP. So we're going from the Amazon question here. Thank you, editor, to COP. Daily time frame, buy entry. I would say XLM is on my radar. XLE is on my radar. You can crack open the XLE and see a lot to like there. We just need a bigger pullback. So yes, is there a buy that I would like to execute? Yes. Are we near that buy? No, my friend. No, not yet. Not yet. Not close. Next up, I've been hearing of a diesel shortage in the U.S. What is the best way to play that? CL? If we're going to play crude oil, let's not, a story or a narrative, whatever it may be, that could point us in the direction of a potential trade, but the trade ultimately has to be built on what we see on the chart. And so the narrative might be in the background, but it may not be something I can do anything with. And I would say crude oil is difficult. I mean, if there is a level that's of interest, I mean, we're at the halfway mark. We're at the halfway mark we're at the 50% of the slow stow. You can see we've stopped there before. There's some support there. I can't say that I like it better than just playing the oil stocks. Chris? Yeah. So again, if we have a narrative, cool. If the narrative directs us to a particular symbol like crude oil, I'm with you. That would likely be the best way to go, unless you can find some diesel stocks. But I can't think of any off the top of my head. But if there is maybe some setup on crude, that narrative has to accompany a setup, maybe a buy at the 50% here, maybe a buy at the -1 standard deviation. we have a minor low that's trying to form. It could be an interesting one, especially if we can continue through 87.35. Yeah. Thanks for the question, Chris. All right. Next up is, hey there, Mr. Walker. Like button, y'all. I appreciate that, Mr. Walker. Could 6E be interpreted as overbought? Yes, it could. Absolutely. So could you look at puts? Well, here is Mr. Walker, where this is going to be a little tricky based upon the significantly macroeconomically heavy, impactful CPI. If we are expecting less hikes, right, less hawkishness from the Federal Reserve, yields will go up. Yields will go down as the bond market and the notes go up. Remember, the yields and the direction of those markets are inverse. And the euro will go up because the euro is going up because the dollar is going down. Whenever there's less hawkishness from a country or expected, we're going to see the currency of that country weaken. And in this case, 6E and US dollar have an inverse or negative correlation. And ultimately, what's going to happen here is we could see a little bit more follow through. That is a larger candle than the average candle on this chart. Would make sense to wait for, well, number one, stochastic is there. I'd say even V-score is okay. Let's wait for a pattern before we get short. But I do like the possibility of an overbought 6E, which is to say on the flip side, we could have an oversold dollar, but I would wait for the pattern. So we have a price indicator saying yes. We have a volume indicator saying we're okay with it. Structure is neutral, but I still need price to say, you know what, that would be the timing for that long put or even short 6E or short Euro US or what have you. All right. Where do we see fine where the M2 is printing? Trader Momo, you can look at the FRED data from the St. Louis Federal Reserve. That's an easy place. So you can just Google FRED M2, and it'll take you to the St. Louis Federal Reserve and show you the different graphs of the M2. They only print those once a month, though. All right. I see a sideways busting out upward. Okay. HPMR. HPMR. Yeah. So SPY and QQQ. So yes, Jan, to your point, when we get the ES and the NQ having to digest greater than normal volatility, right? I mean, this morning was obviously a real shocker. I mean, look, why do I say shocker? I didn't know what the number was going to be. We were calibrated to something much higher. So equity markets did not in any way factor in this. So we have to quickly adjust. And in the quickly adjusting, we go beyond the historical volatility. So yes, that's normal. That's actually normal. That's a great warning that we had higher than average volatility. So there's a visual cue for that. All right. Could I explain the correlation between TLT gold with stocks? Yields going lower is bullish. Gold moving lower is so gold moves inverse to real yields. So real yields and bonds would have more of a synergy. So gold and bonds do have synergy in that they both share either the part of the calculation for real yields or a reaction to real yields. Oil, I wouldn't factor into that. Oil can move on its own narrative because it has a central bank, if you will, in OPEC, and we would need to know what OPEC's doing by way of, printing, if you will, right? Is there more output or less output? And then stocks, well, if it's oil stocks, they're gonna react to oil, right? If it's your indices, S&P, NASDAQ, Dow, they're gonna prefer lower yields. Yeah, they're going to prefer lower yields for sure. And we'd like to see real yields head lower. Real yields heading lower means yields are heading lower and inflation is heading lower. So that's the way I look at those moving parts. All right, next up, if today is on a gap, can I slowly? We need a setup. Yeah, I mean, I hear what you're saying. So I like the scenario. We're playing out a potential scenario, right? So we're going to get a gap. We're going to get a true gap today. And that means we're opening above both the close and the high of yesterday, of Wednesday. So this is a true gap. And I think that's actually volume profile or market profile lingo. And so I'll look at the first 5 minutes to see if I will fade it or not, but I will not presume a fade. Yeah, I will not presume a fade. So I'll always say, what's the setup? So I have a scenario in my mind, which is great. And then now what I want to know is whether or not the low of the first 5 minutes gives me a momentum entry. And then I'll look at V-score. We'll take a look at slow stochastic. We'll take a look at price patterns and so forth. But yes, let's wait for that setup. And usually you'll see that in about the first 5 minutes. If we're going to see and we want gaps to be faded pretty immediately. And that immediately for me has usually a time cutoff of 9:35 ideally. It could be later in the morning, but the best ones usually happen pretty darn quick. All right. Next up is I think HO heating oil may better reflect diesel. Hard to trade if there are no minis. Right. So William, yeah, I'm not disagreeing in any way, but the accessibility of heating oil, right? That would be, where I think a lot of traders would say, yeah, I can, let's look at some of the refined products out of crude, like diesel's one of the refined products. Heating oil would be the same. However, like you said, it's pretty cost prohibitive and relatively speaking, illiquid, right? With crude oil, we have micros, we have options on crude, we have the micros, minis, full size, USO, right? So there's a lot of other ways to express that opinion. Well, good point. What are my thoughts on cocoa, specifically nib? So if I'm going to look at nib, I have to have a really good read on cocoa. I mean, for the most part, it looks like it wants to start trending higher. I haven't looked at softs, Joe. I'll tell you what, once upon a time, I loved looking at softs, cotton, cocoa, sugar, coffee. I guess juice is considered a soft too. Anyways, I used to love those. But I think that anytime we're looking at those, we have to be acutely aware of weather issues, supply, demand, inventory. And I have really personally been a little bit more distant from that narrative. So overall, I can make an assessment of the trend. It seems to be trying to go into an uptrend. But for right now, I'd say it's rather vulnerable for a pullback. At the moment, we could get a nice pullback. And so that's probably short term. I'd say short term, I'm a little bit more bearish. But after a pullback, I might get a little bit more bullish. All right. But I think a pullback would be necessary for that one. What's my short-term take on Apple? What is my short-term take on Apple? Oversold. -2 standard deviation. Multiple Darvi. Oversold stochastic, neutral market. Yeah, oversold. Ready for a buy. I need a pattern. I need a confirmation. But yeah, ready for a buy. Is the daily tradable on futures? The daily what, Mimi? I'm guessing you're talking about the indices? All right. So let's see here. I'm looking at ES. Not yet, but it's getting closer to. I'm looking at some long puts, gang. For as much as we're seeing the inflation number rally the market, I'm looking for long puts in certain corners and certain sectors in the broader averages. I'm actually a little bit more bearish as the continued rate hikes, and yet less expectation for the number of rate hikes we're going to get is propelling the equity markets higher. There's probably a little bit of a post-election move here too. Probably less of that and more CPI. Because I've said all week, gang, elections are a distant second to what's going to move the market this week. CPI was number one, and there's really no second, quite frankly. However, as we get higher and higher in a neutral market that is increasingly looking overbought, yeah, I am a little bit more bearish. But bearish is not to say that I'm expecting new lows or I'm expecting the market to crash below 3,600 or all that other nonsense we hear from time to time. I'll just be looking for an overbought short and then a retracement and maybe a retest of the lows. And down at the lows, I'll be thinking to get long again, right? And back and forth we go. So that's the way I'm looking at the futures, if that's the question. Yeah. All right. So that is the daily time frame on the ES, but we're going to day trade this morning, and I will see you all in the Sector Secrets Mastery and Futures room here in just a little bit. Okay. So if you're a member of the Mastery and you want to know how we're going to day trade post CPI, well, go tune in right now. Futures folks, our Thursday session's coming up next, and I will talk with you all soon. Be good to each other.